Welcome to G2's weekly market update, your snapshot of the key events driving global markets this week. From central bank decisions to trade truces and tech led rallies, here is what moved the markets. United States. Fed cuts rates, markets remain divided. US stocks ended the week mixed with large cap indexes gaining around while small caps lagged. The Nasdaq led the charge, lifted by mega cap tech names riding the AI investment wave. Earnings season continued in full swing. Over 60% of S&P 500 firms have reported so far, with 83% beating profit estimates. But reactions were split. Microsoft, Apple, and Meta slipped, while Amazon, Alphabet, and Nvidia climbed, with Nvidia becoming the first trillion-dollar chip maker against this quarter. The Federal Reserve rate cuts by 25 basis points are expected, signaling it will act as needed amid softening job data. The 10-year Treasury yield dipped to 3.94%, while the dollar index weakened for the second straight week. Europe. ECB stays put as inflation nears target. European markets softened slightly with the stock 600 down 0.67%. Germany and France pulled back while Italy and the UK outperformed, the FTSE 100 gaining over 0.7%, helped by a weaker pound. The European Central Bank held rates steady for a third straight meeting, citing inflation near its 2% target. Eurozone GDP grew 0.2% in quarter 3, slightly above forecast, and inflation eased to 2.1%. Meanwhile, UK housing data showed surprising resilience despite higher borrowing cost. Japan. Markets soar on stimulus hopes. Japan's Nikkei 225 surged over 6%, hitting a record high, its best monthly gain since 1994. The Bank of Japan kept rates unchanged but hinted at possible tightening ahead. Investors cheered speculation of a major fiscal stimulus, and tech stocks rallied alongside global peers. The yen weakened to JPY 154 per dollar, prompting official concern over volatility. Inflation in Tokyo ticked up to 2.8% while retail sales rebounded, signaling a steady recovery trend. China. Mixed markets as growth worries persist. Chinese equities were muted, the CSI 300 slipped while the Shanghai Composite ended marginally higher. Despite a US China trade truce, concerns lingered after Beijing's leadership meeting offered few new stimulus measures. Officials pledged to shift towards a consumption driven growth model, though analysts noted the lack of concrete targets. With household consumption still below global averages, restoring confidence remains China's biggest challenge. G2 takeaway. This week's markets reflected diverging central bank paths and tight tech driven momentum. The Fed's rate cut offered relief but signaled caution ahead. The ECB and Bank of Japan held firm, balancing inflation and growth risks. Tech giants continue to dominate market direction. Global trade tensions may have cooled, but growth headwinds persist. Investors should stay alert as monetary policies evolve and earnings momentum narrows toward year end. That is your G2 weekly market update. Thanks for watching, and do not forget to like, share, and subscribe to G2 Financetech for smart, sharp, and global insights.